What's popping, everybody? Oh shit! Can't lie, I'm kind of lazy today. But we're gonna get it in. It's been a long day. Um, just glad to do what I do best. Now, I will say this: today's gonna be interesting. It's gonna be pretty simple. Don't expect this to be a long session. All right, it's gonna be a good size session, but don't expect a super long session. We're gonna pace ourselves. And we're gonna do this the right way. But today we're covering. I have like a whole curriculum. So I will say this here. Um, Yesterday we did just the foundation, how to set your charts up. Today we're going to be focused on tools. What I mean by tools, the indicators and drawing tools. So you see here, indicators and drawing tools. I'm gonna be covering every last one that I use for the strategy and how it works out for me. And in those tools, you're going to notice that one of them are Fibonacci retracements. So I will cover Fibonacci retracements a little bit today. Tomorrow, I'm going to be doing market structure and candlesticks. All right. And then it's going to go into the following day, which I believe will be our day 4. It's going to be how to identify a trend in full detail, which I feel like y'all definitely need to figure that out. Then day 5 is pretty much the TPU Masterclass full strategy.
And the winner is My Life Real Quick.
Oh shit, what's good? What's good? Appreciate the love. Appreciate the love. Shout out to Zara with the gifted 5 gifted. Appreciate you. Yeah. So on Friday we're gonna go over the whole strategy. I think it's Saturday actually. Saturday we're gonna go over the whole strategy and make sure that it's on point because the strategy is gonna be the icing on the cake, but you gotta understand how to go through the layers on how to trade what I do. If you go you just want to jump straight into strategy, how to use Fibonacci, how to do this, how to do that, you ain't gonna get the results you're looking for. So I had to break this down brick by brick, detail by detail in certain days. So example, if you go back and watch playback, you can be like, all right, well, day 1, this is how he set up his charts. Day 2, this is how he covered, the indicators and the drawing tools. Day 3, he identified how to understand the breakdown of market structure and candlesticks. Day 4, he identified how to, go over the trends. You see what I'm saying? And day 5 is like, oh, he basically could just combine all of that knowledge and just shows the whole strategy into full depth. So the thing about entries, you about to be surprised. How to do entries is gonna be today with Fibonacci. People overthink entries. Entries, you think I care about the candlesticks on entries? I don't. I care about how to read Fibonacci for entries. So that's why I'm gonna break everything down the way I'm doing. I'm covering entries literally today. And then you'll see how it works out in the whole strategy. It's gonna be dope. So let's get right into it. I'm gonna actually turn on. Damn. Let me see. I haven't used the tool in a minute. Yeah, risk management is gonna be talked about today. Risk management and entries. That's why I'm saying it's gonna be an interesting concept. So I'm gonna go show my charts. Trading. It's gonna be an interesting concept. I like how to go about everything. Damn, I don't like how that looks there. All right. So we're gonna basically just cover, what needs to be covered mainly. Let's remove that a little bit. All right. You can see my screen now, right? And for those that want to type and ask questions, you won't be able to unless you are subscribed to my kick. That's the only way you're gonna be able to talk in this channel for the class. That way it's like undivided attention. I could teach what I gotta teach. You get what you gotta get, which is the knowledge, and then we just get straight to it. You know, when I do the open format trading sessions, then that's different. I don't care about the chat just be on subscribers only, but subscribers only, this is for y'all to ask questions as I am teaching. So this gives you opportunity to ask questions in a teaching format. And trust, usually I will charge people a lot of money to just get access to just asking questions while I'm teaching. But like I said, everything is not free. But you have the opportunity to do it to unlock that chat opportunity for like $5. So I think that's pretty different. All right, so let's get into it. Tools. Let's start with this opportunity with this tool. Let me just make sure it's pink. Boom. All right, so we're gonna start with this. We're gonna go here first, then we're gonna go here, then I'm gonna go here, which is gonna be these moving averages. So I'm gonna put 50 on this one, 100 on this one, and 200 on this one. So I'm gonna start with this literally in this order. And describe me how to like really go about these tools. So tool number one, I want y'all to like really understand RSI and ADX. Obviously, ADX, the way how I use this is very simple. It's just to identify how to read trends. All right, how to read trends. And the way how I do that is we got two lines here. I got a black line and a black line, and then we got the blue line. So the two black lines that you see that's above this area here, above the number 20 and 25, is going to identify the trend, and then it's also going to identify which market it's in. All right, so I'm gonna go to this real quick. I should clean that up. Trash those. Boom. So I'm gonna break this down. ADX. ADX is my darkest black line here. That's why you see it. It's a number 2. That's the thickness. And the other ones are number 1 because those are going to talk about the candlesticks, the direction of the market. So ADX being this black line, my bad, this black line, this thick black line, is basically identifying trend. Just is the market getting ready to trend? Yes or no? How do I identify that? I look at the number 20 and I look at the number 25. So if this black line, the dark black line, once again, is above the 20 and 25, it's identifying the market is starting to trend. If this black line is underneath the 2025 like this in the middle, then that just simply means market is consolidating. There is no trend. Now, how can I identify the directional movement, aka average directional movement index? How
And the
can
winner is
I
My Life real quick.
find the directional movement? Shout out to Babe J for the follow. But how can I identify the actual movement for ADX? It's very simple. This black line, which is gonna be my D plus line, I made it match my candlesticks. I made it match my candlesticks. So you can see here, these black candlesticks is my D plus line. The D minus line will be in reference to my blue candlesticks. All right. So I color coded it to match the candlesticks. Now, what's pretty cool about this strategy when you think about it, when the black line and the other black line, very simple, is above the 2025, it is identifying that we're in a bullish trend. Once again, the darkest black line, the thick black line, just showing us trend. So if I have that followed by the D plus line, which is this other black line above the 2025, it's identifying that we're in a bullish trend, as you can see here. And the way how that works is that we can literally grab the mouse or your finger, however you're looking at the chart, you scroll all the way down. Well, not scroll, but like move your mouse down, just glide it, or with your finger, however you want to do it. In between the period separator, you're going to notice that these candlesticks and this period separator is the same motion of what you're seeing right here. Within this period, you could visually just see, even though there's no lines here on these two going down vertically, you can see that these areas is representing this market motion right here. So we see it's bullish market going up, right? Now, if it's a bearish market going down, you will see the reverse of that. You will see the black line, the dark, thick black line, and this blue line above the 2025. It's identifying that the market is going bearish. So that's my D minus line and the ADX line going bearish. So we have a bearish short-term trend right here. Okay, so this is just basically telling you what direction is the market moving. Is it moving bullish with two dark lines above the 2025, or is it moving bearish with the black line and the blue line above the 2025? And if there is no market movement, then the market will be, well, not the market, besides price being the market, you're going to see that ADX is consolidating between the 2025. So that means market is in consolidation. When market is in a strong trend, you will notice that this ADX line is going to move very aggressively. So this is a pickup of the market, for example, starting to accumulate to go strong bullish right around this area here. Okay. It's letting us know that we're about to start picking up bullish value just because the black line and this line is above the 2025. Even though there was pullback, that was due to the market structure patterns, which we're going to cover another day. But that's due to the volume that was basically getting kicked in. So it was just basically telling you over it was getting ready to go bullish. Now, the RSI. This tool, I only use it for 3 different things. So you write it down: overbought, oversold, and divergence. Very simple. What is an overbought market? What is an oversold market? What is divergence? An overbought market is when we see, for example, this black line above the number 70. When it's above the number 70, the market is getting overbought. If this black line is underneath the number 30, the market is oversold. What the hell does oversold and overbought mean in that situation? When the market is oversold, and if you're going into a bullish trend, if the market is oversold, it's then you know that you could buy the dip. All right? Just basically a new higher low, essentially. If you're in a bullish trend, if the market's oversold in a bullish trend, is then you know that you're basically identifying, I'm gonna call it. It's basically you're identifying. Oh, you can't see the fucking fuck. I'm gonna hide my camera real quick. All right. You see the numbers now? I'm sorry. I had no idea. Oh. Fuck. Damn. All right. I'm gonna start that shit over. Yeah. All right. So real quick, RSI. Let me cover this. My bad. ADX. Let me cover this really, really fast again. The 2025. These are the numbers. When the black line and the black line, the ADX and the D plus line is above the 2025, that means we're going bullish. If the black line, the ADX, and the D minus line, this blue line, is above the 2025, we're going bearish. If the ADX, the D plus line, and D minus line is in between the 2025, we're going in consolidation, as you can see here. And yeah, that's pretty much ADX. Now, RSI, if this black line is underneath the 30, we're calling this oversold. So if you're in a bullish trend and you're seeing an oversold market, you essentially understand that you're buying a dip. If the black line is above the 70, it's basically letting you know it's overbought. So if you're in a bearish trend, for example, and the market just tends to get a little bit overbought, that lets you know it's creating that new lower high, and you could like basically sell that high. But there's a science to this. I just don't use it for that. That's just a good identification keyword. I will say this again. I do not use it for that. That's just how that works, and that's just a good indication. All right. I like to look at oversold and overbought markets aligned with divergence, meaning I only give a fuck about divergence. All right. What the hell is divergence? I'm so glad that you asked. So this is divergence. You see how this is basically giving me a pattern like a double bottom and a nice engulfing candlestick? Notice it's bouncing off of that 200 SMA. And that's why I'm saying I'm going to cover all these things later on in the strategy. So we can circle back on this eventually on March 3rd, for example. But this right here is flat. Notice this is not flat. This is doing completely a different angle than going flat. This, if it was to be aligned, it will be this flat and this will be flat too. That means this will be down here. You see what I'm saying? And then it'll be going up, but that's not the case. So what we have here is flat market condition bouncing off of support, making that new higher low, hence the oversold market. So I only look for divergence once again in oversold and overbought markets. So if I see divergence in an oversold market in a bullish trend and I see double bottom being formed, for example, that's identifying that I can now be in a buy position. You see what I'm saying? And market went bullish. Now, vice versa. We could see that again in a bearish condition. This is flat. As you can see here, once again, price is flat, and this is not flat with it. This is an indication of bearish divergence. And once again, what makes it so easy is that this is literally aligned with this area here. So you could see that this candle here, this motion here, making that double top, is basically an indication of what you see right here. Oh my God, that looks so ugly. You know, see? It's divergence. It's basically going against what the price is showing. So here's another example of like normal market conditions. So I'll give you an example of this. See how this is curving up? No, this is just doing the same thing too. That's not divergence. That's regular market condition. You see what I'm saying? Here's another angle of divergence. You see this being flat and this is pushing up? That's also divergence. Price is pushing up higher while this is not pushing up higher. It's going against it. That's divergence. Divergence is basically this doing the opposite of what price is doing. But you only look at it from the ultimate bottoms, as you can see here, or the ultimate highs. So in this situation, we have an ultimate bottom. This is the low point. So price is basically telling me it's oversold, it's getting exhausted, banks about to get involved, and that's where the divergence come in play. So divergence is basically volume in the markets moving ahead of what price is doing, and then price catches up later. So that means your institutions is already moving money. It just the retail trader don't know that because they only see price. They're not understanding volume. You understand what I'm saying now? Does that make sense for everybody? We do type something. So divergence is when you see a difference between market and RSI. That's showing you can get in position with other confirmations, basically. Basically. All right. So it's something that you might have to practice, but it's, I've been doing this, like I said, for 11 years. So me seeing divergence is like cake. Here's another example. See, this is flat, nice double bottom. You notice this is not flat. It's like once you like learn it, you're going to spot it. So if you're looking for markets to change and remember, we're just going off of H1, but all of this makes sense because this is bouncing off of the weekly TP area as well. So remember, I'm just showing you everything on H1. It looks different when you get to H4. You see what I'm saying? It's stronger when you start looking at H4. I'll give you the best one. Look at the daily time frame. The daily time frame is why I was buying this thing. I was like, oh shit, we got free money on the board. I'm up like 8K already on this. I got 100% return on my money because I hunted. I saw this divergence so clean. I was like, look at this double bottom in that supply, in that demand zone. Daily time frame is a very strong time frame. It's curving so aggressive. I see the consolidation. Price is already in the 60s. It's pretty low. It dropped from 100. Bitcoin was at 126,000. The daily time frame is showing me bullish divergence. I was stacking buys over here for that reason. That's why I was telling everybody, yo, we're going to be buying this. You understand? So it all just comes down to like, if y'all really pay attention to what I'm teaching, y'all will be successful as hell. But you have to understand these things come with time. So That's why I just want to make sure I'm breaking out all these tools so you can have it as a reference. Keep in mind, you can even go to the WAP and then go look at the whole strategy in itself too, because I do break it down there as well. Probably in a lot more detail because it's for the class. But I'm just doing this for the stream perspective of it, redoing it, talking about it, and honestly, once again, y'all can ask questions. Divergence, is helped me a lot with my trades as well. When it comes down to like overall setups, and I really want to, let's say, get involved in something, and I want to smooth it out, and I see it, and it's making sense to me, and nice areas in the market, I tend to trade a little bit more aggressive at times because I see it. Yeah, you definitely need ADX because I'm gonna give you an example. Just because you see market consolidating, that doesn't mean that it's. How can I say this? Let's say, for example, give you an example. This look like market is consolidating here, right? Technically, it's moving sideways. ADX is not moving sideways with it. ADX is starting to give you hints that it's trying to break out into trend. The black line is trying to trend. This right here is cluttered. This is no trend. Keep in mind, look at this. This is all technically underneath the 2025, this whole area. But what do you see? All of this bullish momentum. So this is saying it's consolidating. It's not wrong. It was breaking out of the consolidation overall. It just in this area here, which is here, was consolidating. It was then a little mess, and then it broke out. Then all of a sudden we have ADX breaking out. So I do like this for confirmation, but once again, you have to really, really just pick your tools and like really run with it. All right, so let's get into other things. Like I said, this class won't be as long because it's just covering tools, indicators, and joints. All right, so let's cover the moving averages. I have SMA close 50, SMA close 100, and SMA close 200. SMA close 50 will be my red line, as you can see here. My SMA close 100 will be my green line that you see here. My SMA close 200 will be my blue line that you see here. What the hell do Ryan use them for? I use them for dynamic form of support and resistance. Period separators I don't already have to cover because they're just periods that we talked about on day one. So, all right, when it comes down to these moving averages, I use them as dynamic forms of support and resistance. What does that mean? They could be used as a form of horizontal support or resistance, or it could be used as a trend line. So in this situation, you can see this double bottom. I'll give you a perfect example. The 200 is, by the way, is my strongest. The 100 is not as strong, but it's strong. And then the 50 is obviously a lot less stronger than the 100. So what is the difference between the three? The 50 takes the last 50 candlesticks on the H1 time frame. So this is the last 50 hours on the H1 time frame. What is the 100? It's the last 100 hours. This is pertaining to H1 on the H1 time frame. What is a 200? It's the last 200 hours, once again, on the H1 time frame. You understand why this time frame is strong, but it's not the strongest because it's going off of this. So when you see price respect the 200, as you can see here, is then we know that it's respecting the last 200 hours that was participating in the market. And that's the dynamic form of its ultimate level of support. It's basically letting you know in a smooth form, simple moving average, that we're getting that type of support. And then that divergence actually helps and it confirms that this is checking out as a strong area of support. All right. Here's another example. When you see the red line cross over the green line, it's showing us that the market is getting ready to trend in that direction. So if you see let's say this example, this is green and this is red. When this crossed over, that lets me know that the market is starting to go bearish. So in this situation, we have the opposite. We have the red crossing over the green, as you can see here. that cross, let me clear it up so you can see it. Once again, that cross that's right here, this going above this green line here is indicating that the market is starting to go bullish. So when you see this area here being respected and it makes that nice higher low, it lets us know that the market was going bullish today, for example. Now, how can we also identify the market was going bullish today? The period separator also closed bullish. So when I cover trends, you see why this all lines up. By default, masterclass strategy, if market ends bullish for the day, we're going to be looking for a bullish Fibonacci outlook to basically buy the Fibonacci, depending on where it's at, 38.2 and all that other stuff, which I'm going to cover in a bit. How to basically get inside of that setup. So, example, if we're looking for bullish buys for this day and the Fibonacci is giving us those PRZs to basically get involved in on those buys, we're basically allowing ourselves to buy that dip. So that's what happened here. Price respected at 50 moving average, more than likely respected at 38.2. It gave a nice 1-1 setup and it pushed up aggressively on H1 today by respecting the last 50 hours of this market condition. Now, this does change. If I was to go to the H4 time frame, this is no longer based upon an hourly workload. This is now based upon a 4-hour workload. So you take 4 times 50, and that would be the number of how many hours. I'm not doing the math, but I should do the math. All right, let's just do the math. Teaching. All right. Where we at? We take 50 times 4. So this will be equivalent to a 200 SMA. So you understand why I say the higher the time frame, the stronger the trend. So if you are trading the last 200 hours on the H4, that's equivalent to a 200 SMA on H1. So that just let me know the 50 moving average here is a lot stronger, obviously, than the one on H1, because that's only telling me 50 hours versus 200 hours. And it basically are the same SMA. It just, this time frame has a lot more hours involved per candlestick. So if this is taking the last 50 candlesticks, that's 50 times 4. And then now we have 200. Once again, because each candlestick is represented on the H4 time frame per 4 hours. It prints another candlestick every 4 hours. So that's how we're going to get that number. Now, the 100, you do the same thing. You do 100 times 4, and obviously you get 400 hours of time with the green moving average, and then you get the 200, and you times that by 4, and then you have 800 hours on the blue moving average. So when we see this breakout, for example, that had happened right here, this is why it was so interesting to see this happen. When this happened today and it broke past that 200 moving average, I'm not sure if y'all have alerts going on for certain exchanges or certain platforms. Bitcoin was getting fucking lit up. Oh, Bitcoin's back at 70, 71, 72, 73. It just was just getting spammed. Why? Because price is breaking out and it's confirmation that it's finally getting out of this consolidation trend, and the 200 moving average is starting to show that. And this is once again on the H4. And then what we have as confirmation as well, the 50 moving average is starting to cross over that green moving average. So this is showing us that we're getting into a bullish trend, meaning we could start buying the dip on Bitcoin when it pulls back. You just buy the dip. You see what I'm saying? I'm just using Bitcoin for an example. But once again, the strategy works on every pair. But that's just how I use my moving averages. Now let's go to the daily time frame. Here's an example. Look at the daily time frame. The 50 SMA, what the fuck? The 50 SMA is basically on a daily time frame. That's letting me know it's the last 50 days. Daily by default is letting me know, yo, listen, the H4 is not it. I'm stronger. I'm 50 days. The 100 is letting me know I'm 100 days. The 200 lets me know I'm 200 days. You understand? So it gives me more strength. So now that we're approaching this SMA is saying, look, we're going to judge this off of the last 50 days. If we break past this, then we're going to go to this one over here as resistance. But what do you notice? If we're basically using this strategy to buy Bitcoin at this low, which is in respect to the TP area over here that respected the 200 SMA at that on a weekly time frame, this which the 200 is representing the last 200 weeks, super strong support, right? And the TP1 lets me know, hey, look, we're getting ready for buys. So that lets me know that price is going to be approaching this 100 SMA at the TP1. So I'm predicting Bitcoin to go to 84,000. Also, Masterclass strategy without even dealing with SMAs, uh, without even having a whole headache, without even caring about market patterns, without caring about nothing. We already know the market is telling us it's going to 84,000 just because we know how to draw the Fibonacci in the overall trend. That's why covering that topic and the masterclass strategy with everything takes away all of the noise, and it's like, damn, the ultimate strategy is like a masterclass. You know what I'm saying? It's like a real mastery. But yeah, all these things are good to know. That's you know, this is an area maybe we're gonna have some pullback. You know, then we could probably buy that dip, and then it's gonna be approaching this other area as resistance, and then it might be more stronger, and we could like take profit. You understand? That's what basically these moving averages are doing. It's letting us know how to basically consider exits or look for certain pullbacks to get back involved in the setup so we can get better entries and all of that good stuff. Um, so this 200 SMA, as I was saying, you know, on the weekly time frame is the last 200 weeks. This 100 is the last 100 weeks, and the 50 is the last 50 weeks. What do we see here? The 50 is trying to get down, but we don't even have a full crossover on a weekly time frame. So we understand we're still overall bullish. It just, yeah, price pulled back. It basically made it low, but it more than likely is going to come back up. All right. The question is just how much, because it definitely hit 60,000 and it hit TP1 and it bounced off this 200 SMA, which is relevant to the last 200 weeks of Bitcoin. All right. And then the monthly time frame is, you know, you don't even see the blue moving average on yours. I don't even know where the hell is that. But this, for example, is way more powerful. The monthly is the same. This is the last 50 months. This is the last 100 months. And then we have the last 200 months for the blue one. But like I said, I don't even know where the blue line is at. I can't even find it. It's, you know, self-explanatory. All right. So that's how I use the moving averages. Does anybody have questions on moving averages? I feel like it's very redundant. Don't mind me right now. I'm just looking at stuff in my own health on this. SMAs are lagging indicators, not ahead of price. Indicators are lagging indicators. Remember that. Indicators are always lagging. All right. Indicators are always lagging. So would you say this divergence is the top of Bitcoin right now? Just want to make sure. I mean, H1, it might look like that, but H4, we don't have divergence, so no. Daily, we don't have divergence, so no. I'm not really a fan of looking at it like honestly, no, I don't even see as divergence. It's not. This is lower than here. This right here is a little bit higher. Price was lower here. And then this went a little bit higher. Notice, here we go. Let's just follow the mouse. That's lower. This is higher. It just dragged out, but this is technically higher than here. It just, how high do you want this to go up the screen? You know what I'm saying? So pay attention to the detail. This is divergence because it's damn sure slope off. It didn't even go that high. Like you see it sloping off and it consolidated. So you can see that being divergent. So this is an example of what that should have looked like. All right. What do we have? We covered all of these tools. Drawings. This is a little bit interesting. Remember, you don't have to use all of these drawing tools. I just have them in my toolbox just because, you know, I like trying out shit and I like just having my stuff a little bit filled. But the only ones that's going to matter here is rectangle, trend line, and Fibonacci. vertical line, and horizontal line. Freehand is when I draw on the charts for teaching purposes. But as you can see today, I'm not even using freehand. I actually pulled up a software called Epic Pen so I could just draw on the charts instead. It's a little bit quicker for me. But yeah, so when it comes down to your drawings, the ones that I like to use, again, rectangle, trend line, Fibonacci retracement, vertical line, and horizontal line, we need to understand how to use them. So let's start with horizontal line. Horizontal line, I like to just use them as straight up support and resistance. All right. Just areas of support and resistance. I let you have a very easy access to it. But as y'all know, I won't use these on my charts. Y'all barely see me use these on charts because I rather use supply and demand zones, which is stronger than horizontal lines. But these are used just to have a line of support and resistance. So if support, for example, being here is being respected and it doesn't break, then we can look for buys. If the resistance is being respected and it doesn't break, then we can look for sells. Once again, I don't really care for the support and resistance lines or horizontal lines, my bad. I care for using supply and demand zones. In a way, how we get those is by using rectangle. So rectangle is pretty cool. Like I really like rectangle. It highlights a whole area versus just a stupid line. And even then, we still got these lines attached to it. So the way how I draw my supply and demand zones, which is very simple, I look for the tip of the body and the tip of the wick. Now, Ryan, y'all probably asking me, right? Ryan, where do you find these tip of bodies and tip of wicks? Like, how do I go about it? Damn, that's a great question. So this is how you do it. This low point and this high point. I only look for keyword ultimate. I think every time I say this, it goes over people's heads, and I don't know why. Ultimate high and lows. That's all I used it for. I swear to God. So I look inside the period separator, and I only look for the ultimate low and the ultimate high. It's so easy. You look literally in the box, you find the most lowest possible candlesticks in that box, which is the ultimate low. And you look inside the box, you find the most highest candlesticks in a box in the area, obviously. And you find that high. So what I do is that I say, you know what? I got the supply and I got the demand. What do I do with that? You get the rectangle and you basically you highlight it and you draw it out like this instead of just having a line. And then look how beautiful that looks. This ultimate low got respected and market open here, came back, retested it, and spiked up. That is beautiful work. That is a nice demand zone. So what is a demand zone? Demand is basically where you find buying value. All right. In this industry, unfortunately, this is called God knows how many different variations. So people could just sell you on a different product to make it sound like they're cool or something, which is aggravating. Some people, I don't want to even talk about it, but it's like you have people doing the most. This is just classic, as simple as what it's called. It's called supply and demand zones. You get a rectangle, you draw it, and you get your supply and your demand zones. Let me just grab another one, rectangle. So I basically just did an ultimate low. You can see how that got respected. And this is what it looks like in an ultimate high category. Now, when I draw my zones or draw any tools, I like to right click it, get the dots showing. You're going to have all these options. I like to, let me move this over. You have all of these options. What I like to do is make sure it has show in background selected, and I like to lock it. When I click lock, it doesn't matter if the dot show, I can't move it. But if the dot, if this, for example, is not locked, then I can move it, and I don't want to be moving it while I'm moving my charts to do my work. Then it messes everything up. So you want to make sure you have them always locked after you're done doing your work. Now, Supply. What is supply? Supply is basically where you find your resistance, and this is where the selling volume occurs. Hence, supply. You buy low in the market and you sell high. You buy when prices in demand and you sell when prices in supply. So basically, what you see here is price retesting the resistance, as you can see this horizontal line for it, gets inside of that supply zone, which is fucking amazing, and then it drops. But not only does it drop, we got clarification that this area here has bearish divergence, and it also checks out for a pullback into the trend. All right. So that's basically what rectangles are. It's gonna make more sense when I paint the whole picture with a strategy. Um, Now, another tool that I like to use is vertical lines. Vertical lines, I don't need them because we got period separators, but back in the day, if you didn't have them, you had to, figure out how to get your period separators drawn up. So you would grab vertical lines and you would technically, damn, you grab vertical lines and you would do literally what I'm doing right now. Dropping them to identify period separators. Some people like to do this on TradingView to get the period separators, but you could just use a platform that has them already built in, so you don't have to worry about that. But once again, to get the proper period separator time, you need to make sure it's fully set to GMT2. If it's not that, you got the wrong times. Your periods will be off and won't be the same. It won't. If you bring up the questions, be like, Ryan, my period separators are off. It doesn't go along with your strategy. I don't understand what's going on. Well, I don't use TradingView for that reason, and I don't use any time outside of GMT2. All right. Once again, GMT2. Time zones: GMT2 USA, GMT2 USA. All right. So we draw a zone at that pullback. No, I mean, yeah, to the future. Yeah. I'm sorry. You can. Literally, once again, you draw your zones at the tip of the body to the tip of the wick. It's literally like giving you the area to it's literally like copy paste. It said, look, it's already there. So all you got to do, the fuck? It's not letting me be great. All right. Yeah, this is acting up. All right. See what I'm saying? So it does become a zone, but is price going to come back down to yesterday's low? I don't know, but it's there. I see price coming back, for example, a lot more easier. Like I said, you can draw your zones as much as you want, but I see price coming back from the last 1, 2, 2, 3 days high. See what I'm saying? Price could come back to the area. Nah, I don't draw new ones every period separator because I don't draw my zones pertaining to H1. I like to draw them on H4. So this is the best example. This is like letting me know that when these zones, remember, the higher the time frame, the stronger the trend. So if I'm drawing on H4, those zones are going to be way more stronger than any zone on the H1. So I like to draw my zones on the H4 because markets usually move week to week. You got literally a whole week. Market closes on the weekend, then opens up a brand new week. So I love to draw them on H4 and up. So we got the week, the month to month. As you can see, it's strong as hell right here. And then you got the year. You could draw them as well. But I'm gonna give you an example. Rectangle. You can't say this is not real. This is literally what's happening right now. Notice I'm out my Bitcoin trades for a reason. I wasn't holding them because I already saw all of this when I was joining up with y'all numerous amounts of times. See what I'm saying? This is the ultimate low on the weekly time frame. This is basically all of 2025's data. It's letting me know where their price is retesting last year's low, which it broke past and now it's being used as resistance. So it broke past it as demand and now it became supply. So I need price to break past this to retest it to turn it into demand. So right now, this might pull back down to 60,000 maybe and then go up. Or it might just shoot all the way up because the volume is provided by this daily time frame right now. But this daily time frame is about to match up with this 50 SMA, which is also letting me know this is the last 50 days. So it could get a little turbulence right here. I said turbulence, well, a little bit of turbulence right there. And then it could then eventually break out to the upside. So you just want to make sure that you have your shit on point. That's why I'm very open to like teaching the strategy, but I'm also very aware that some people might mess this up because you want to make sure how to draw your zones, but you don't really need to also focus on it when you actually learn the strategy. It's just another good tool to have as reference. Fibonacci, I promise you, once you understand the strategy and trends and how to combine all this stuff together and make it make sense, you're gonna notice that you're going to be just setting up your charts, drawing Fibonacci, sending penny orders, and going out with your day a lot faster. Like literally, I could teach you how to set up your charts in 5 to 10. Not set up your charts, but like charts already got to be set up. But to apply the masterclass to the charts and set penny orders in all in 5 to 10 minutes and move on to another chart or going with your day. So you got a lot of like opportunity to grow with the strategy. Let me see. We did rectangle, we did horizontal and vertical, trend line. Once again, this is another tool. It's not like you need it, but people like it. I don't really need it. I don't really use it like I used to back in the day. I used to use this like a madman, but it's not really needed. But once again, it's a trend line. What I did here, I connected this to the tip of the wick, this to the tip of the body to get the nice trend angle. And notice that price came back here, kind of close to it, and it shot up. So this maintained a bullish trend, making new higher lows. And they could also do a trend line for a bearish outlook as well. As you can see here. Once again, I don't really use this. I use Fibonacci a lot. I could get a little bit more fancy here. Now we're adding tools on tools, and I can see the flow. Price broke out, hit the trend line, came back, hit the trend line, went inside that demand zone, and then it broke through the trend line. And the 50 SMA moved along with it. So this is just pure naked trading, technically, without having too much things going on within your charts. Does this all make sense so far? I could be talking, but I want to make sure y'all comprehending. If y'all comprehending, put W's in the chat. All right, good. Workspace, Bitcoin. And now we're going to get to the final topic of tools. And we can pretty much wrap this up. I don't feel like I need to make this such a long session. Tools, I'm just breaking this down so you understand how to use each tool. But when you understand how to use the tools with the strategy, you're going to be like, oh, I get it. So I'm going to give you an example. You're watching the strategy, you don't understand the strategy, but you understand the strategy to a certain extent, but you're kind of questioning one item like a tool. Then you come back to the day 2 video and you watch the topics in pertaining to that tool. And then you go back and look at the strategy and get your aha moments. See why I'm doing it the way I'm doing it? It's to make sure that y'all catch up. And if y'all really want to get the in-depth version of it, when I was like literally building the whole strategy on like a curriculum, like a whole course, go to WAP and then you see basically all the tools I'm using, but obviously it won't be on DX Trade. It will be on MetaTrader 5. But it's the same concepts. It just I took that knowledge of how to use my own masterclass strategy and then found the tools needed and what I need to use and just applied it to this charting platform. I can literally trade on any charting platform as long as it has my tools that I use for the masterclass. I'm sorry, for the masterclass strategy. All right. The last thing that we're going to cover here is Fibonacci. So I'm going to draw one right here. Oh, no, I'm not. Delete that. But just, matter of fact, it's already up.
And the winner is
let's
My
just
Life
like
real
leave
quick.
this. Yo, shout out to Poppin' Ali. Definitely shout out to you for the follow. So I'm going to bring this up. We're going to cover this, and then, like I said, we're going to be wrapping this up. Bitcoin is cake to me. Like, honestly, the whole market is cake to me. I'm actually going to redo my fib. Bitcoin is not something to really worry about either. It's just, can you catch up to it? And if you can't, then just throw some penny orders. Like, I'm gonna play with it today. I might catch a 1-1. I know Bitcoin might go to 75,000. It could potentially go back up, or it might pull back, retest this whole area down here. Actually, I'm gonna play my charts real quick. So just do this a little bit now. Did I lock that? No. All right. Price might pull back. I feel like it's already hit its target. I think I need to just let it be. I don't want to chase that thing down. All right, so 11 years in a game. It's a long time. Let's go into this. The bread and the butter. Fibonacci. I'm not covering the strategy on how to draw it. I'm covering what I use Fibonacci for. And I use it for PRZs. I'm still trying to analyze how. Okay, there we go. PRZs. Price rejection zones. Some people call it price rejection levels. Some people just call them Fibonacci numbers. But they're basically just areas that I enter and exit off the market. So we got these right here for my entries. We have these down here for my stop losses. Damn. I have to redo my drawing. Where teaching goes wrong. All right. Let's do that again. I have these right here for my entries. I have these right here for my stop losses. And I have these right here for my take profits. There's another one that's up there, but I have to like shrink everything. I'm just trying to teach out what I got going on. I'm going to put a divider right here for a reason. And I'm going to just break it down. So the 38.2, the fit. Damn, that yellow is not it. The 38.2, the 50, and the 61.8. I use this stop loss right here. The 100. I should definitely put that pink. I use this stop loss right here, the 100. All right. When it comes down to the 78 and the 88.6, I use this stop loss here, the 110. I'm going to say that again. The 38.2, the 50, and 61.8, I use the stop loss at the 100. The 78.6 and 88.6, I use the stop loss at the 110. All right. When I trade, I get my entry and I set my stop loss. When I trade, I look for how to get my lot size. Screw the take profit, it's irrelevant. Everybody wants to figure out how to make money, but it's not something that we got to figure out for now. We need to figure out how to apply risk to reward. I assure you, those entry points already has the risk to reward preset into it. So I just want y'all to understand how to use the risk management with this. When it comes down to trading, and let's say we were to get an entry, we need to factor the risk before the reward. A lot of people want to focus about the reward before the risk. And then in some cases, delete the whole damn stop loss. Fuck. Hold up. What the fuck? That's weird. Yep. That's some bullshit. My bad, y'all. Got some shit in my teeth. Fuck. Just about fuck my schedule up tomorrow. What I was trying to thought. All right, so basically, the 38.2, for example, we need to use that with stop loss at the 100. The way how we use that to get that stop loss at the 100, we need to understand what the 38.2 gives us in value. All right. In value, the 38.2 gives us, I'm already here. We got enough space already over here. The 38.2 gives us a 1-to-1 risk to reward. So this is about risk to reward. So I'm going to put RR, risk to reward. 38.2 is going to give us a 1-1. The 50 is going to give us a 1 to 1.5. Fuck. What the fuck went on in my mouth? 61.8 is going to give us a 1-2. 78.6 is going to give us a 1-3. And the 88.6. You good, Sonny. And the 88.6 is going to give us a 1-5. The way how I do this is simple. If I get a trade at 38.2, let's say right here, I put a pending order at 38.2. I'm going to put a stop loss right here on that 100. And I'll put a take profit right here at TP1. I only like to target the TP1. I don't really care for the TP2. That's just greedy as hell. It's there for reference on pullbacks if you want to take a short if it gets there at most. Or it's good to know if you're trailing the order with your stop loss going into profit, for example, and you do believe it's going to go higher, you could get greedy, I guess, and move your stop loss further in profit and target the TP2. I only target TP1. To get the 1 to 1.5, basically what we're going to do is that we're going to put a penny order right here. And pretty much a stop loss right here and a TP right here. If we're going to go for a 1, 2, we're just basically putting a penny order here, stop loss right here, TP right here. If we're going to go for a 1, 3, you put the penny order here, stop loss is getting moved as well. We're not using that one no more. The stop loss is down here. See how that changes? So once you see this gap, things change. The only thing that changes is the stop loss. All right. If we're to go for the 1, 5, we put the penny order here, the stop loss here, the TP here. And that's pretty much what I do on a day-to-day basis for Fibonacci. And you could base upon your whole entries with the penny orders depending on the pullback or where the market is going to go. So I'm going to give you an example. If you feel like, I'm not saying this is what I would do right now. I'm not taking no trades right now. I'm like good for the week right now. I'm chilling. If you see, let's say, for example, you feel like this zone price is going to come back down to it, you could technically, you can technically say, you know what? I feel like this is going to come back down to this area. So you go here and use these ladders. Something covering with y'all today too. These ladders on this right side of the screen. You could basically click it right there at 61.8. You want to make sure that move is not on. Nothing else is on. You want to make sure arrow's on so this doesn't move. You're going to grab that stop loss. You're going to drag it. You're going to put it right there on the 100. You're going to grab that TP and you're going to drag it. Look at that crosshair. You put it on that TP. You alter your lot size for what you want to put. Notice this is giving you a 1 to 1.5. It's like a 1, 1, but a little bit better. That's why I say it's a 1 to 1.5. No, I lied. This is a 1, 2. I'm tripping. 61.8 is giving us a 1, 2. And this is why I want to cover with y'all so I can see this. Notice the numbers are going to change on this left side of the screen. If I put it at 38.2, this is basically giving me a 1, 1. You're risking 2K to make 2.2s, same shit. If you want to get like a perfect example, perfect T, you're risking 2K to make 2K. Technically, it's just a 1, 1. This is going to give us a nice 1 to 1.5. You're risking 1.6 to make 2.6. And then you have this right here. When we move it more, you're basically getting a 1, 2. You're risking 1.2 to get 2.9. If you go down to 78.6 and you move this down, you're getting a now a 1, 3. You're risking 1K to make 3.5K. And then, as you can see here, once again, the 1, 5, you're risking $720 to make 3.8K. So it just depends on where the market is going to go. So don't just aim for random penny orders. Aim for something that makes sense. If I feel like price is going to come back down to this zone, now I'm going to look for a 1, 2 for the day. If I feel like I just want to get in a trade, I don't care about it being a perfect trade, then fuck it. Let's just go for the 1, 1 or the 1, 2. My bad, the 1, 1 or the 1.5 before it even gets to the zone. Some people with my strategy, they put a penny order on 38, 50, and 61. And they just put their stop losses and they just divide their lot sizes into 3 different entry points so they don't miss. Some people divide their lot size in 5 different entry points so they're getting all the trades, But if you're wrong for the day, that's a big loss. I'm just letting you know. That's why I like to just use 1 entry point for the day. I don't really like to stack too much. But when you use the strategy, just make sure that you're using your risk management. One of the things I did not cover was how to apply your risk management. You're going to take your balance, whatever your balance is, Let me give you an example. Bring out the calculator again. Damn, that's not good. Fuck. You're gonna take your balance, like 100,000 times the percent you want to risk. Let's say you want to risk, fuck it, 10%, random number. You want to risk 10%. You type 10%. You're gonna divide that into your stop loss. So let's go ahead and find the stop loss of what this will be in the setup. Let's say 38.2, for example. My stop loss is 4,091.3 points. So that's 409 pips. You dropped the last digits. So that's 409 pips. So we're going to write that all over again, apparently. 100,000 times 10%. Divide that into 409 pips. Balance times percent on the risk divided into your stop loss. And that would create your lot size, essentially. In this case, I guess we got to write it out. 100,000 times 10%. Divide it into 4091. Unfortunately, I have to write it all the way out. 0.3. You could trade 2.4 lots, 2.44. So 2.44 lots is equivalent to $24 a pip. So we take $24 a pip times 4091. I'm definitely doing my math wrong. Well, I'm going to pull out this app because I am definitely losing a ton of thoughts. I'm just going to use this app called Stenu on my phone real quick. Yeah, as y'all can tell, math ain't really my strong suit. Times 10%. Stop loss 4091. Which should be, I'm calculating, want to do that shit. So 409. Fuck. 100,000. Damn, my shit was messed up. 409. Steeny was not even working. This is just weird, fucked up timing. We're about to go old school. We're about to eyeball this shit. Fuck it. All right, yeah, that shit crashed 3 times. All right, so we're gonna eyeball this shit. I have 100,000. I want to risk 10K. Let's just do it like that. You know, it's fucked up. That's kind of like similar to the math that I literally just did. I know it wasn't tripping. Like, it's been a minute. 100,000 times 10%. Divide that into 4 over 9. You get 24. So that's 2.4 lots. Oh, 2.44 lots. I'm sorry. So once again, I know I wasn't doing this shit wrong, but like I said, my brain sometimes will go to math. I just lose my thoughts and my own thoughts. So basically, you can see what I'm talking about. Balance 10%, right? That's what I want to risk. 100,000 times the percent I want to risk, which is 10%. We're going to divide that into the stop loss, which you dropped the last digit. So we're only going to put 409. I know I wasn't losing my mind. We're going to get 24.4 $24 per pip is equivalent to 2.44 because one lot equals $10. So we need to double that to equal $20, and the 0.44 averages out to 10K. So 2.44 lots is 10K. Y'all get what I'm saying? I had to do it with the calculator. I know it was a tripping, but I literally just did it perfectly after like re-establishing what the hell I was trying to do mentally. I do preach this often, but I don't know why the math wasn't mathing. But I literally just put it in, and yeah, listen, I dropped out of college because of math. So if I had to teach math, we're gonna be here all fucking day. But the strategy works with it, just straight up. If you don't want to overthink it, you just do percentages. Mentally, you have 100K, you want to risk 2%, or you want to risk 5%. You figure out from there in the calculator, and you do your math. But anyways, I feel like we covered all the topics today for the masterclass. I don't really think there's much to cover today. When it comes down to the setup, I just wanted to basically just cover how to use the strategy with indicators. I really feel like when it comes down to the strategy, you need to understand how to use the indicators and tools overall to basically amplify the strategy. Like I said, tomorrow we're going to cover candlesticks and market structure. And then we're going to cover how to read and identify your trends. And then we're going to cover the strategy. The trends is going to help you understand the strategy a lot faster. So tomorrow we're going to get back into it. Y'all all have a blessed night. I really ain't got much else to say, so peace.
I hope you 103. I'm quick to let a bitch go. I got residue stuck in the cup. I lean like I'm missing a toe. Make a third and I promise don't sweat at all. One hand motion tell him to go. Go, go, go. Do I hope you 103. I'm quick to let a bitch go. I got residue stuck in the cup. I lean like I'm missing a toe. Make a third and I promise don't sweat at all. One hand motion tell him to go. Go, go, go. Do I hope you 103. I'm quick to let a bitch go. I got residue stuck in the cup. I lean like I'm missing a toe. Make a third and I promise don't sweat at all. One hand motion tell him to go. Go, go, go. Do I hope you 103. I'm quick to let a bitch go. I got residue stuck